Hello everyone, this is Victor Fiasco. Today is December 4th, 2023, and well, it's been a while, but here's a new market update. Uh, I've been traveling around the world, moving with my family, so I haven't been very active on YouTube or Substack. But if you follow me on Twitter, I'm still posting almost daily, so you can have some market updates. But here we are after a historic November. Uh, this is a really good lesson also about the markets of how unpredictable sometimes they can be and how fast things can change. We were declining in an intermediate downtrend for 3 months, where S&P lost more around 10%, and other high flying sectors like ARC, which was doing really well until July, lost over 33%, and now here we are almost back at the highs in this ETF, and actually other ETFs at new highs like technology. So it kind of shows you how you have to be flexible, and you can't be you always have to be thinking that you can be wrong, and that you have to change your tune if the market changes and go with the flow. So where are we right now? Unless these are my many indicators that I studies that I use to gauge breadth, and right now we are bullish. Everywhere you see it, breadth studies are indicating a bullish condition in the market. Short term, which is here, this is based on the 5-day moving average. No, we got overbought here in early November, which was before this rally used to be a good sign that the market will go back or chop for a little while, even though the uptrend would resume, you see. But here we saw a drastic change of character, and the market went sideways and then broke out again. We got a little bit overbought once again here mid-month, and since then the market has been moving, creeping higher, so creeping higher. But if you see at other sectors like the Russell 2000, it's kept on moving higher, and sectors that were really punished started to do really well, like regional banks, um, ARC, family funds took. So before this, it would at least, mean a pullback or the end of a rally, and now we're just moving higher. So it kind of shows you the power that's behind this move, and that something important happened. So right now we were rolling off from overbought, and now we're actually moving up again. So and above this 35 level, which is below that is bearish, but now we're in a bullish situation short term. Um, Intermediate term, for this indicator, basically when the green line is above the red line, we have a bullish environment for intermediate term, and vice versa. You see here, we cross down the red above the green, and we get a bearish environment in the market for quite a while. And that we had a cross here in early November after a big move, and since then we've been moving higher, and actually we're actually at levels that they're pretty overbought. Okay, this is the only pseudo bearish thing that I'm seeing short term, but we've reached levels in this indicator that it's a more or less a kind of, you could say, a midterm overbought signal. Overbought doesn't mean the market's gonna sell off. Overbought is different from oversold. Usually you're gonna see when the market gets oversold, you're gonna see quick reactions. Like here we were oversold. Here we got oversold, and we got a bounce. Here we got oversold, and a big rally. Same here. when the market is overbought, the market can keep on grinding higher or chop a little bit or have a small pullback and keep on moving higher. But we're at levels that, at least you warrant that the market should pull back a bit or chop. And you can see here, we got here, market basically went sideways and then rolled over. Here we got a small pullback, move higher. Here, pullback. Here we reached this zone and chopped a little bit and then rolled lower. Same here. You can go back and here we got a little bit of a chop, then we made a high, and then we rolled off. So it's not a bad sign long term, but I think after this historic move, because this rally, like some people try to normalize it, but here are some nice charts from bar chart that show you like this rally was historic since gained 9%, second best November since 1980, and it was not only a rally on U.S. stocks, but everything rallied. So it was actually one of the strongest everything rallies since 2008. So I mean, of course the market can move higher, but this is not like this return. If you analyze it, is 200%. So at least I would say we pull back or we drift a little bit, and if we get a pullback, let me make that clear. If we get a nice pullback, we get a little bit of fear in the market. We make all these late buyers suffer a bit. We break down here, even maybe we break down even below this support, and we get people really bearish, and then it will recover. It will be pretty bullish, and we can get a really nice pull higher. We'll see. But I wouldn't be very aggressive here buying stocks. I think if you miss the move, you miss the move, and I think being a little bit patient, waiting for a better entry, I don't know. I think it's more prudent. But needless to say, breadth is bullish for a midterm or long-term perspective. Let's see, something that to note. This is the long-term indicator. It's the percentage of stocks in a primary uptrend. We see here, and using the S&P 100, which is big cap stocks. Here we are at 62%. Over 40, it's bullish. When we get below 40, actually, what happened here, we got a breakdown below the 200-day moving average, and we got below 40, and every other indicator was bearish. So actually, this was a false breakdown, and all these conditions that you see green actually they were red back then, and that meant like we might have been starting a new bear market, but it didn't happen. So part of, I think, the violence of this rally is that it got a lot of people short and shorting the whole and underinvested, and part of this move is a massive short covering, and people that were underinvested and now they want to chase returns, or funds that want to own the hot stocks, chasing the stocks higher just to own them, right? Plus, we were in earnings season, which also tends to be a bullish time for markets. Okay, so we got that false breakdown, and breadth actually flipped, and now we're above 40, which is a critical level. You see that when we're below 40, 2022 we got below 40 here. We got a big snapback rally, and then after that we rolled over, and then the market really got bearish. When this is below 40, this is when bad things happen. Okay, so it recovered quite a bit. It's not like a small recovery. It recovered quite a bit. But something to note, that's why I put it in a yellow shade, is that a divergence that I'm seeing that might not be important right now, but if the market rolls down later, or we pull back and we don't really get a sharp rally right away, and we just start drifting sideways, and this starts declining and getting below 40, that would be worrisome. and you see that the previous highs in the market were made with levels in breadth that were higher than now. Okay, so this peak here had a much had more stocks in a primary uptrend. So, and here, for example, back here in January, when the market was at 415, the percentage of stocks in a primary uptrend was quite a bit higher. And if we look at the Nasdaq Composite, to get a broader view of more stocks, you'll see something similar. Actually, here in the Nasdaq, we got below 40 here in September, and it got really bearish. We were 24%, and now we're back over 40. But as you see, in a much, the Nasdaq is basically at the highest Nasdaq Composite, but breadth is way below the highest, and actually you see 3 lower highs here. So that's like the kind of like a warning sign. Right now, the momentum, the trend of breadth is moving higher, so this rally could keep on and sustain itself for a while. But this is something to be worried about. If we get a pullback and we see breadth in the Nasdaq Composite drop below 40%, and in the S&P 500 also start to weaken and even drop below 40%, I think that will be a pretty bad sign. Okay, what else? Okay, well, 52-week highs, lows. It's also a very widely followed indicator, and as you see here, we started having more highs and lows after a long time of new lows dominating, which is bearish. Here we see that when the market is healthy, we see new highs dominating, and right now, once again, new highs are dominating, so that's bullish. There's no change in that until now. We're dropping off a bit, but there's still more highs and lows. Buying pressure. This is an indicator I've been tinkering with as of late. It's over here, but kind of similar to 52-week highs, lows, only that's a bit quicker. We see that the market is in a healthy uptrend when the green line is above the red. The green line is buying pressure, the red line is selling pressure. Here we see how it flipped, and we have selling pressure dominating until here that day. And we have actually, something that's cool also that you can see this indicator is that this low here, you see that the buying pressure was increasing since that low. Even though we got a drop here, buying pressure was increasing. So it was kind of, you can also use it to spot some divergences. So this low had a lot of buying pressure compared to this low, and then when we took over, and well, buying pressure is dominating, it's dropping off a bit, but you see selling pressure is way down here. There's no real selling, so this is also at a bullish configuration. And last but not least, the VIX, something I also follow. And as you see, the trend in the VIX is negative, and that's bullish. It's at pretty low levels, but that doesn't mean that it can't remain low levels. And it's trending down, and the negative trend, which is bullish for stocks, and vice versa. Here you see when the trend changed higher in September. You can see that was September 20th here that day, and we see that when the VIX was trending higher, the market was also trending lower. So VIX is also in a bullish configuration. So wherever you see it, it's bullish. A little bit of overbought. Hopefully we can get some pullback, but the market is telling you, the market's message through a lot of different gauges showing you that it wants to move higher. Something also interesting worth mentioning is sentiment. And sentiment if you've been following Twitter or just reading the headlines, bearish sentiment really collapsed. Like people were super bearish here. Sentiment got really bearish, which is something you get when you get a bottom. But what happened afterwards? That basically bears disappeared, and you can see it here. Goldman Sachs. This is a tweet from bar chart, which I include in the link in the Substack if you want to see it. Show that according to Goldman Sachs, bearish sentiments had one of the largest declines in history. So we've been seeing something pretty special. And also another tweet I found that's useful regarding sentiment is that you need dumb money or retail investors or people that are not really sophisticated to buy and chase the market to get a bull market, because a bull market needs buyers. And here Jay, who's a really good technician from Sentiment Trader, puts this post. And the signs when you get a crossing of dumb money, so that means not sophisticated investors are getting bullish, crosses above 80%, well, the S&P is above the 200 moving average, which it is. So that means we're in an uptrend and people are getting bullish. That's a good sign. You see that the returns long term are pretty bullish with a high win rate. So you need those buyers to propel the market higher. That doesn't mean, of course, the market can pull back and these buyers can get scared. That will be bullish. That happens quite a few times during a bull market. That the money gets overextended and smart money gets bearish. And then when the market has a nice pullback, you get the different configuration. Smart money is buying the pullback. The money who bought probably chased too much, bought high, gets bearish, and then the market resets and keeps on moving higher. So we're getting some bullishness, but that's not something to concern yourself long term right now. But might be also an indication that we're due for maybe a pullback. And if you're following Twitter and other media, crypto bros are getting super bullish, and you can see the FOMO like building. Like Friday, look at this movement, the Russell 2000 in ARK, huge moves. Here in Bitcoin miners, a big move on Friday, and well, actually now it's a pre-market, it's up 10%. So you can see that there's FOMO, there's people just throwing money at speculative stocks and getting all crazy and think they're going to become a millionaire. And you need that in a bull market, but maybe again short term we're due for a pullback. We need to wipe out this dumb investors a little bit to get a more fuel once again for the market to move higher. So yeah, well, that's it. I hope you enjoyed the update. I hope to hear from you guys. Send me your comments. You can find me on Twitter. And I'll show you right now. It's over here. This is my Twitter, Victor Riesco. So I hope to hear from you. And also all my charts and studies, I do them with TC 2000 from Gordon. I think it's an excellent platform. You can create so much stuff with it. You can invent your own studies. You can chart basically whatever you think, your own formulas, and scan them and put them on the chart. So it's a highly recommended platform. I'll post a link if you wanna try it out and get a discount through my link. So check that out. And last but not least, I recently uploaded in my YouTube channel a video regarding utilizing trend and mean reversion in breadth studies to gauge market conditions. This was a presentation I did for the CMT, and I actually explained how I do all of these kind of studies that you see here, how I create them, how I came about them, how you can make signals and test them, and you can develop your own studies according to your time frame and your market techniques, and you can turn that into a press study that's for the whole market. So I think that's very useful and entertaining also if you like charts and you like technical analysis. So check that out on my YouTube channel. Well, hope everything goes well for you this week, and I'll see you around.